Are there other fees that need to be paid at closing if you're looking to purchase a home besides a down payment? Well, today we're here with Rhonda Johnson to find out more about what additional cost does a buyer have when purchasing a property. Hey, Rhonda.
Hey Melissa, how are you?
So, we've done quite a few shows about different types of loan programs and all of those types of things, and I think we've covered down payments really well. However, there's a settlement statement, and on that settlement statement at closing, there's a lot of different fees that are charged to both the buyer and the seller. So, can we go over today my typical first-time home buyer? Ring, ring, yes, let's go get pre-qualified. We already talked about how they can save for their down payment by stopping drinking lattes every day, don't run by the grocery store, the gas station, save up those PFDs. But what additional money is needed for a buyer to purchase a property, and what are those closing costs?
Right, right. So I think that we talked a little bit too about the process, and remember there could be up to 26 different industries involved in one buyer getting a mortgage loan. So everything from the realtors to the buyers to the sellers to the lenders to the title companies, inspectors, appraisers. I mean, there's insurance companies, surveyors, there's just this magnitude of people involved in bringing this one loan to the closing table. So guess what? Everybody wants to get paid for their job. And so that's what all of these fees are. So on average, you can estimate between 3 and 4% of your sales price is going to go towards closing costs in addition to what you're going to pay for a down payment. Now, some of those fees are going to be like for an appraisal. So we want to make sure the home is worth what you're paying for it, that there aren't any health or safety hazards with the home, and that it's going to hang out for the next 30 years because we're doing a 30-year loan. So the appraiser is going to get paid. Those are on average anywhere from $950 to $1,250 for a single family. And for a multifamily, they get a little bit more expensive. Sometimes the lenders have fees, so you'll see things like an origination fee or a processing fee or an underwriting fee or a doc prep fee. Those are typically fees that the lender gets. And so the lender obviously wants to get paid as well. And then you've got some title fees. So the title is going to be to make sure that you get a clear title to this property, that you're not going to inherit any liens against this property that don't belong to you. They're going to make sure that any liens against the property are paid off. They're also going to provide the escrow closing service. So the buyer will go in and sign, seller will go in and sign, then they record everything and disperse the funds. There's going to be those recording fees because to record the documents to show that you now own this home and that the lender has a lien against it, there's fees to record all of that. And then there's some other potential fees for maybe you need an as-built survey that shows where the house sits on the lot. Maybe you need a well and septic test. Maybe you need you want to have a home inspection. So all of these different industries involved in that one loan closing are going to be construed with those closing costs. Now there's another section of the fees, Melissa, that a lot of people don't really think about, and that's your prepaids. So what that means is that when we calculate out your monthly payment, then it's going to include the principal and interest to pay back the loan that you borrowed. Generally speaking, it's also going to include your taxes and your insurance. And so we collect enough each month in your payment to set those taxes and insurance aside into a separate little escrow account so that as you make each payment, it builds up, builds up, builds up. And when the tax bill comes due, we reach into your little savings account, we write the check and pay your taxes, and we write the check and pay your insurance. So you don't have those two big bills every year. But because it takes you 12 months to get a whole year's worth built up into that account, then we want to go ahead and collect the first year's insurance premium right up at closing. And that way your insurance is paid a whole year in advance. And then when you start making your first payment, we start your savings account for next year's bill that will come due. And we'll do the same thing with the taxes. Those will be prorated though, because as a buyer, you're only going to be responsible from the day of closing till the end of the year. And as a seller, you'll be responsible from the first of the year till the day of closing. So those are fees that we're going to collect at closing. But even if you could pay cash for the house, those are fees you're going to pay anyway. that wouldn't necessarily have to do with loan costs. So that's kind of how those closing costs all come together.
So it's interesting because I had a closing this week with a buyer and we sold his property. So his settlement statement, he reviewed his settlement statement for the sale of his property. Then he reviewed the settlement statement for the purchase of his property. And he quickly recognized, oh, now I get how the prepaids work and the reason. Because, of course, when he sold his property, he had that money in that escrow impound account. And that money was returned to him because he had been, like you said, putting it in kind of like a little savings so that that money could be used as if he continued owning that house. So for him, it finally made sense that, oh, I guess I do have to prepay my insurance for a year, and I do need to prorated property taxes. And because we were delayed 2 days, it made a difference because the seller paid. The numbers changed because the seller still owned the house for 2 days, so the buyer didn't have to pay for those 2 days. So those amounts changed. So what I heard you say, it's about 3 to 4% of the purchase price or the loan amount that's typically in closing cost.
I usually use the sales price as that estimate. So depending on the type of loan you do and numerous different things, 3 to 4% is a really good average kind of rule of thumb that you can work with.
And so you know that when we're in a buyer's market, typically in a buyer's market, a seller will have to step forward and offer to pay all those closing costs. If any of you were working with me during the time, or you were aware of your friends, family members that were buying and selling during last year when interest rates went from right around 3% to about 6% overnight, we actually did a show on, hey, sellers, in order to help that buyer with that bump, you might offer to pay some of their closing costs so that buyer could use that 3% that they'd set aside for their closing costs to possibly buy their interest rate down. Now we've kind of all settled into interest rates are going to be between 5.5% and 7% this year. That's kind of where they're going to float. Everybody's settling in. People are still out buying. So again, depending upon what area of Alaska you're purchasing in, you can write an offer and ask the seller to help contribute for some of those closing costs. But when we're in a market where we have very tight inventory and we consider it a seller's market, most likely you as a buyer are going to end up paying primarily majority of all your closing costs, and you're not going to be able to ask the seller for that. So you'll need your down payment plus that 3 to 4%. Again, why you want to pick up the phone and talk to Rhonda if you're considering buying, so she can cover all that with you and you guys can structure how to write an offer the best way. Because sometimes you do clever things, right, with writing an offer.
Yeah, so that's what I was just going to say is that a lot of times I'll have a client, let's say, like for easy math, the sales price was $200,000, and you knew that you were going to need an additional $8,000 to come into closing with, along with your down payment. And that's just going to make it really kind of tight and difficult to come up with. So another strategy might be that you offer the seller $208,000 and ask him to pick up those $8,000 in closing costs. Now, there's some pitfalls to that. If the appraisal doesn't come in at $208,000, the seller may not be willing to continue with that plan. And of course, you're going to have higher payments because you're borrowing more. But that $8,000 financed out over the life of the loan is less than $50 a month. And that $50 a month is a lot easier to come up with than another $8,000 out of your pocket. So just a strategy that we can talk about and then work with your realtor on to make sure that it's written up that'll help you ultimately get into this home.
So if you are thinking about buying a home, it's really important that you do pick up the phone. Give Rhonda a call at the end of this video. Her contact information is there. Her website has this great Calendly link. You can actually schedule a time to talk with her. She'll actually talk with you just like she's talking with me right now here. She'll do a video conference with you, and we'll talk to you about your options, because the one thing is in buying in today's market, it's really important for you to be empowered and understand how to best use your money in purchasing this asset that's going to return you pretty much financial growth and wealth over the next 30 years because we're going to see an increase in equity and you're going to pay your loan down. So purchasing is way better than renting. So you definitely want to pick up the phone and call Rhonda so that you know what these numbers are. One thing we never want to see happen is that somebody doesn't understand this and come near closing and you realize that you don't really have all the money you need in order to finish the deal. That's why, like in last week's show, we talked more about why lenders ask for all that documentation, because they need to make sure that if you're going to pay for your down payment and you're going to pay all your own closing costs, that you in fact have that. Plus, I think that you have to have a little bit of reserves left over, correct?
Yeah, on several of the programs you do, but I always tell clients I would rather have this conversation on day one than day done. So you go into it with your eyes wide open and know exactly what to expect at the end.
And you can plan for it. So follow me on all our social media sites. You can follow me at Melissa Harmel Realtor. And again, at the end of this video, you'll have my contact information, Rhonda's contact information. Pick up the phone, call us, chat with us, text us, email us, and we'll be happy to chat with you. So we'll see you again next week, Rhonda. Have a good day.
All right, see you later.